Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to talk about oil. Oil has been on the boil. We have been seeing a sharp rise in the oil prices. There has been a lot of data points. We actually saw a sharp cut down in the oil inventories in the US data. We have been seeing that a sort of slowdown in the China data is not actually making any print on the oil. Perhaps the market is reading a lot in terms of how the OPEC oil cuts is going to impact the market. And then also in the oil inventories actually were showing a sort of drop in the US data. It has actually fueled in terms of rally in the oil prices. Also, we have been sort of hearing about the weather events, which usually start happening around this time, and as we move towards the calendar year end. The hurricane events in the US, those are also creating some sort of impact. So let's go one by one through them and try and understand what's happening in the crude oil prices and perhaps what we should be expecting. And to talk about all of that, let me now welcome our dear friend and an industry veteran on the commodities. Let me now welcome Mr. Peter McGuire, CEO of XM Australia. Peter is no stranger to this show. He has participated on this show a couple of times and has always given us a lot of insights on currencies and commodities. Peter, welcome to the show.
Oh, lovely to see you, Piyush. Greetings from Sydney, Australia. How's everything in Mumbai?
Well, Mumbai is heating up as the oil prices are heating up in the market. So let me actually start first with you. A couple of months back, when we actually first talked about oil prices, somewhere around 72, 71, and I clearly recall our conversation where you said that sometime in the year, we cannot time, but sometime in the year, you would be expecting that the oil price start trading between the range of 80 and 90. And now, a couple of months later, we are again talking in a show together. And I'm asking you that the oil prices are in that range. What's the thought and what has driven first this rally from 72 in the Brent or slightly lower in the WTI now to in the range of 80s?
Well, you've got WTI. I'm just noticing I was just giving a talk about 83.20, 83.40, and I've now got $87 on Brent. So, they've been well and truly bid up here. And I think that, they'll be through. Brent will certainly be through 90 this calendar month. I have no doubt about it. I know we're on the first of the month, but it's a long way to go to the 30th of September. You highlighted a couple of key points and a couple of points that our viewers need to be across. What's happening in Moscow, as far as production cuts, and Saudis to follow toe. We've got Deputy Prime Minister Novak discussing that with the market sometime next week on OPEC Plus. So how severe those cuts are going to be, and then naturally if Saudis follow suit, then that's not a good sign. Rolling in is what you mentioned also as far as hurricanes and that whole the impact that can have in the Gulf of Mexico as far as production. So yeah, there's a couple of major concerns, and you've got that sleeping giant that could impact greatly as far as energy prices in northwestern Australia. A strike or a possible strike and union discussions for better conditions, higher wages, and so on for Chevron out of their Wheatstone and Gorgon platforms, or those two plants account for 5% of global LNG. So this could be a little bit of a perfect storm if all of these bad factors come to play.
And what a timing. I'll first take your opinion on the current development, which is the Italia hurricane, and then we'll come back to the OPEC cuts. What's your view on the hurricane? Like, the season has started, and we are witnessing for some parts of US Category 3, some part Category 1, and so on. What's your view there, and what kind of impact we could see?
Well, they're not unusual. I mean, the middle of the season's about the middle to the 20th of September. So we're 3 weeks from the middle of it, but it's a late start to the season. And from what I'm hearing and what I'm seeing as far as meteorological, then it's going to be a pretty tough season. Secondly, there are further hurricanes developing, and they develop from warm water, as we know. As they spin over that warm water, then they gain in their velocity and category, of course. And the impact that can have from really Florida to California can be immense, and they can drive up and down that east coast And then if they really remember, you put your mind back to 2005, Hurricane Katrina, or it might have been 6. No, I think it was 5. And that was devastation through that New Orleans region, and naturally all of the rigs they get demolished, and they've got to stop production, and it's a tough time. And so you've got that as a starting point, and then what does that do to price and price sensitivity?
That's interesting. So do you see that the inventory data could actually be looking way different next month? Because so far, and I was trying to link the dots here. In terms of jobs, very strong data. When you actually look housing starts, okayish. When you look the crude inventory data, and then when you try to match the GDP data was showing a slowdown, but the crude oil inventory data in US was showing sharp cut. Like, what's happening there?
Well, this is a great concern. I mean, when you're thinking about what you've got as far as storage and so on, that's going to be an impact if you don't need any disruptions. We've also got the strategic petroleum reserves nearly at record low levels. So all of these factors are starting to come into play, and then how that impacts. The great sleeper is inflation. We don't want higher energy costs from here to ratchet up inflation again. You're now on top of it, and you seem to be stamping it down. And we've had rate rise after rate rise, and where we are compared to 2 years ago, you don't want to return to $100 to $120 oil. I'm not suggesting you're going to get there, but it seems to be onward and upward at the moment. And I wouldn't be surprised, as I said earlier, mid-90s achievable sometime in September. And then the impact and the flow-on effect is, if you get hurricanes and all of these other issues materialize, then that's not a good sign for the consumer, Piyush.
Absolutely. I think, being a oil consumer country, I think the Indian government would be deeply concerned about it. Now, let's talk about the OPEC. I know you're going to attend the meeting, the OPEC meeting next month. Help us understand how stronger sort of impact, or how sort of meaningful OPEC cuts have been so far. Are you observing that Saudi Arabia has been actually able to follow up on the last cuts announced? And when the OPEC members meet next month, what they're going to discuss? Because already the oil prices are rallying. Now it's between 85 and 90 if we're talking about Brent. What the sort of view in the meeting would be now?
Well, when you're thinking about that Russia to unveil new OPEC plus supply cuts, and then Saudi to follow, these are the two elephants in the room. The two of the three largest producers in the world, United States in there as well. That meeting, I'm going to ADIPEC in Abu Dhabi, but the traditionally it's the end of November, but there may be a quicker meeting from OPEC plus to discuss the situation with Deputy Prime Minister Novak, and how that's going to be laid out as far as those cuts for Moscow and their exports. So there's that part of it. Secondly, does the UAE follow suit to Big Brother being Saudi, and also look at cutting production? And then do other countries follow suit? So this is, again, it really impacts the market, and it impacts market sentiment. And that's not a positive to the market. That's a negative to the market, because when you start crimping supply, then that can really impact price very quickly. And as I said, the consumer out there will be feeling it, I think, significantly come September, October.
Right. So where we are, you're expecting the oil prices to move towards the mid-90s. Is that something as an outlook we should take?
Yeah, I think so. I definitely do, considering the rally that you've seen for Brent now, approaching that $88 level. You're only a couple of bucks shy of 90. So, yeah, I think that it's on an upward trajectory. And, WTI, Piyush, has gained 5% this week. That's a big move to the upside. It's strong. And, the oil headed for its biggest weekly gain since April. So, the market's absorbing the sensitivity with it. And it's also, everyone seems to be long.
Right. And from that perspective, what it implies then again for the dollar? Because I'm just thinking oil prices higher, so inflation goes higher. and then actually you see that the PMI data are not looking that great in Europe and US both. US still better, but Europe absolutely not great. And
Yeah.
then you actually take a look at the gold prices, and then you observe that okay, gold prices have not done really that great. They might have slightly corrected, but they have not done anything in the last few months.
No,
Does
it's
that
been.
also imply gold prices could rally?
Well, I think gold's had a bit of it's gone to sleep for a little while and it's been choppy, but it's back around that 1960 at the moment. Yeah, I agree with you. It was sold down, but we had that strong rally in US dollar. The dollar's given up some of those gains from earlier in the week. It hit a 104.60, I think. You're now at about 103.60. So it's lost some of that. It's exhausted to the upside. It moved up so quickly and it's given back some of those, profit taking. Where we run, as you you discussed, and the overview was, what happens with PMIs, how's inflation, value of dollar, how all of this. We've just got to see. It's still very delicate in the sense of what's going on with inflation. That's the major concern, I think, on everyone's radar. The rest I'd come to terms with as far as PMIs and unemployment data and so on. But I just want to see whether if we have a re-lift in inflation, then that really shocks the market in many ways, because you start to now see further rate rises if inflation starts to, go up higher than where it is at the moment.
Yeah, I was just looking at the data and the chart points, and actually, the last time the WTI was trading at this level was slightly towards the 2021 and about again. So
Yeah.
this is definitely we're making almost a 2 year sort of high moves now. Would that be right?
Yeah, that's about it, I'd say. Yep. So, where we run from here, I've just got to, we're conscious as far as what demand's coming from Eurozone, but China is certainly still, big imports, and it hasn't really quietened down that much as far as consumption, and the world hasn't either. So, I sit here and it's going to be a very interesting 4-month lead into 2024. This last 4 months, I think, could be quite exciting for traders. And I don't know how high it can go, but I do think you're going to see one thing, and that's big volatility.
Right. And from that perspective, what's the opinion around the dollar? Are we also going to see some movement in the dollar also?
Yeah, I think so. I mean, you were at 104.60 during the week, earlier in the week, now at 103.60. I wouldn't be surprised to probably nudge it down a little bit further from here. I think it's going to be choppy. We're waiting for those numbers to drop tonight as far as non-farm payroll. That'll be, as far as confidence. So let's see what happens with those. The dollar really had a big move to the upside quickly, and that in turn, profit taking, and it was just exhausted. And it's not unusual to see it be sold off a little bit as far as some of that profit taking. But, I'm just looking here, COMEX gold still sitting at 1965. I'm curious to see where yen goes. I mean, you're running it around that 146 sort of handle, 145.60, 146. Do you see intervention from the Bank of Japan if it hits that 150, which I'm pretty sure it will? You've got a euro sitting at 108.50, and it's given up. It's been, I think there's further softness as far as the euro dollar, and the Great British pound still around that. It seems to be whipsawing a little bit, but still, 125 to 127 sort of handle. It's currently 126.5.
Very nice. So basically, oil, we are bullish. Gold, basically, gold is neutral. Perhaps correct me if I'm just concluding what we are talking about. And dollar, basically, also looking what, neutral or mild to bullish. What kind of stance you want to put on?
I think it's got to be mild to bullish, because if you see further, I just got to see what impact. First off, non-farm payrolls, what happens as far as unemployment moving forward? Where does the US equities go, and what happens with the storyline as far as crude prices and weather outages? And if they impact production in the States, then, if and you've got low inventory levels, is the state's got to be a significant importer. These are all conditions that it could be, as I said, it could end up being a perfect storm for the energy markets, and the LNG, happening over here, annoying the market. I think it's going to be interesting to look at from the sidelines. It's too hard to forecast, but you've got all of these components that you're putting in the cake and making the cake, which is price, and all the ingredients seem to be pretty big factors as far as ingredients. The Saudis following suit with Russia and so on.
Absolutely, Peter. Always a pleasure talking to you and getting all the insights. This time we'll take the crude view home. Crude is looking bullish, and perhaps that is the highlight of our conversation today. Thanks a lot for coming on the show.
Thank you, Piyush. Great to see you. Cheers.
Cheers. Bye-bye, Peter. And dear viewers, hope you like the show and hope you like the insights. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.